Good afternoon, folks, and welcome to today's informational webinar on Value Line's options product. My name is Rob Scordato, and I am one of your senior equity analysts here at Value Line. I'm also one of the representatives of our options team. Given the challenges that we've all been presented due to the COVID-19 pandemic, we're very happy that we're able to host this event for you today. And I'd just like to start by thanking our longtime subscribers to the Value Line Options Survey and welcoming those of you that are new to our service or considering a subscription. Thank you all for attending. Before I jump into the heart of the presentation, I want to provide a brief overview of who we are here at Value Line for those of you who might be joining us for the first time. We're a New York headquartered corporation that's been providing investment research for more than 85 years. Our flagship product is the Value Line Investment Survey, and is a service that has a unique source of financial information which is designed to help investors make informed investment decisions that fit their individual goals at various levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analyses, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists, and our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including the 1,700 that are listed in the service. Value Line also does not execute any trades for its subscribers and therefore has no vested interest in whether or not our subscribers buy, sell, or hold specific equities. Also of note, none of our staff or professional securities analysts are permitted to own any shares of any company that they cover. Now, with that said, today's presentation is focused on the Value Line Weekly Option Strategist product. This is a service that we've been providing for more than 20 years, and it helps our subscribers identify attractive option investments. We're going to go over the basic outline of the Value Line Option Survey, including reports that we administer on a weekly basis. We're also going to show you the instructional tools that can be found on our website, and we're going to be taking an in-depth look at our screener, during which time we'll run a few screens to show you just how useful and flexible the product can really be. As Chris mentioned throughout the presentation, please feel free to ask any questions in the Q&A box that's been provided, and at the end we'll try to get to as many as we can. If we're unable to answer any of your questions today, we ask that you forward your inquiries to the options team at vloptions@valueline.com, and we'll do the best that we can to get back to you as quickly as we can. So the weekly option survey provides information and ranks on all regularly listed options. With some variability, this typically includes more than 600,000 options on 2,900 plus stocks and closed-end funds. In order to help you take advantage of any opportunities as they arise, our model is constructed so that it is updated on an hourly basis over the course of the trading day. To access the option survey, you'd head to valueline.com and sign in with your username and password, and then from the welcome screen, you can click on options. That will bring you to this page here, and located at the top of the page, you can see our navigational tabs titled Commentary, Screener, Survey Issues, and Resources. The Commentary tab is essentially our options homepage, which you're viewing now. It highlights all the recent editorial content that's been posted to the weekly option survey. And upon scrolling down the page, you can view most of the articles that have been added over the past week and a half. Also, using the page numbers at the bottom, you can preview all of the past articles that have been posted since the option survey's inception. Every Monday, our weekly list of common rank changes is released. On Tuesdays, our weekly option screen goes out, along with a second article that features an option strategy on an individual stock. Then on Wednesdays, our weekly option rank performance page is released. And on Thursdays, we have our weekly strategist report. The common rank changes report highlights those stocks that have had their common ranks changed over the past week and also have attractive options for any of the 4 primary option strategies. On the website, you can see a few examples of these stocks. Then upon opening the PDF, you can see the full article, which reveals all the stocks that meet these criteria grouped separately into the 4 primary option strategies. Back on the website, we include a list of the featured screens that we've used to filter these options. You can save these screens for your own use later if you're so inclined. Our weekly screen article is a snapshot in time of the results of a particular strategy that an analyst deems attractive given current market fundamentals, as well as any pertinent geopolitical or macroeconomic factors. This particular report deals with covered calls, and it features a short explanation of the current economic backdrop and why it's so conducive to the option strategy selected by the analyst. Like the Common Rank Changes article, you get a fairly in-depth preview on the Value Line website. Then in the attached PDF, you can view the table of the specific criteria that was used to generate these results. In this screen specifically, the analyst was seeking out covered calls with a delta between 20 and 55 that offer a minimum amount of protection of 2%, and they have set a cap on the potential bid-ask spread at 20%, and they've established a minimum dividend yield of 3%. Using these criteria, you can see that all the results that were found in the table at the bottom of the page. We're going to show you some more details and ins and outs of our screener later, but for now we're going to continue with a background on our weekly report so you know exactly what you can expect as a subscriber. So the second of the two articles that are usually disseminated on Tuesdays is the option strategy on an individual stock, and it's exactly that. The article highlights company-specific information and typically looks at its profile as a business, its recent earnings performances, and how its stock price has been faring of late. This particular report takes a look at NetApp Inc., and it's also a covered call report. As you can see, it features all the company and stock-specific information that we've mentioned, including earnings performances and what is expected of the company in the coming months. And if we move down to the bottom of the page, we can see the specific option suggestion that's been made by the analyst. In these boxes, call options will appear with an orange header, and put options will appear with a green header. And here you'll find several pertinent facts about the option. And usually for your convenience, we, the analysts, will take some of these key statistics from the box and highlight them in the article as well. In this case, we've noted the strike price on the option is $55, and it expires on March 19th of 2021. The annualized yield, assuming a similar call written for the duration of the year, is 24.28%. Heading back to the options homepage, we'll discuss with you our weekly option rank performance piece. This article goes out on Wednesdays, and it shows the compiled weekly performance of all the options that exist within the Value Line universe that have also been identified by our screener as having attractive characteristics for all the primary option strategies. In other words, all the call buys with a rank of 1, all the call writes with a rank of 5, and so on. The performance metrics are calculated using closing prices from Tuesday through Tuesday of the following week, and as you can see on the PDF here, it gives a comprehensive breakdown of how each of the strategies performed individually. On the right side of the page, the PDF also gives a breakdown of our market neutral hedges, which are combined strategies that when put together create a synthetic position. It's important to be aware of the fact, however, that this article is really meant to highlight the strength of the option ranking system above anything else. And we say that because given the sheer volume involved in calculating some of these performance metrics, as you can see, many feature upwards of tens or even hundreds of thousands of options. It's not really practical to replicate the portfolio, unfortunately. But it does highlight the quality of our ranking system and how it can be used to help you build your own portfolio of options. The last of our weekly articles is the Weekly Strategist Report. This one comes out on Thursdays, and it's typically a bit more in-depth and educational in nature than the other reports that are released throughout the week. We found that utilizing this format helps to explain a lot of the more nuanced elements of the options survey, but these reports can range from strategic topics like hedging your portfolio with options and protecting your assets with options. And then we have some more entry-level information targeted towards our newer subscribers, like navigating the website and refresher courses on our screener. This particular week's article, Meet the Greeks, gives an explanation of delta, gamma, theta, vega, and rho, and shows you exactly how changes in these values have an impact on the value of your options. All these articles, they can be very helpful in keeping you up to date on high-ranking options, giving you examples of how we, the analysts, use the tools to generate screens and select potential option positions, and provide you with educational and strategic information that help you become a more well-rounded investor. Clicking on any of these reports that we've highlighted also typically leads you to a series of relevant, helpful links and attachments. Now, apart from the articles that we provide on a weekly basis, if we move to the next tab at the top of your page now, we also have the option screener. The screener is a highly customizable tool that offers hourly updates based on prices starting at 10 a.m. and running through the market close at 4 p.m. And for newer users, and to make it a little easier to filter, it generally caps off the number of options that you're able to select and download to about 1,000. If you'd prefer an unlimited quantity of options, we still offer our expanded screener, which is located under the Resources tab. We find that tool is more useful to experienced investors that are familiar with downloading data and incorporating it into Excel spreadsheets for additional filtering. As for this screener, you can see that some of the specs that it offers. You can see some of the specs that it offers by scrolling up and down the page. But about halfway down, you come to a section titled Ranks, as you can see here. The option ranking system is based on two items. First is the timeliness rank of the underlying stock. So a stock with a favorable timeliness rank of 1 or 2 is more likely to be highly rated for bullish option strategies, such as call buying, covered call writing, and put writing. Whereas stocks that feature unfavorable timeliness ranks, 4 or 5, are more likely to have options that are suitable for bearish strategies like put buying and naked call writing. Secondly, after taking into account the timeliness rank, our system also determines whether an option appears undervalued or overvalued based on our model's adjusted volatility forecast for that particular option. So when you put these statistics together, we can say that an option that appears to be undervalued and is based on a stock with a timeliness rank of 1 is likely to hold a top rank for call buying. And we'll come back to this in just a minute, but for now, we're going to scroll back to the top of the page here and note that while you could do a lot of different things to refine your search, you could just as easily head to the basic information section of the page, and a researcher can type in any individual ticker or index that they want to view for options that are currently available. You can also search here by entering in a single ticker or a series of tickers into the box. So as an example, we're going to type in the tickers for Microsoft and JM Smucker, which are MSFT and SJM. And upon completing a search, you can see that we've yielded upwards of thousands of results for these two specific stocks, of course. And the results highlight metrics like strike prices, bid and ask prices, levels of covered call and put right protection, and max profit. Now, say we want to conduct a search for these same two stocks, but we're only interested in looking at call options or put options specifically. We can go back to the screener, keep those tickers in the designated box, and make a selection from the list of preset screens that are available in order to refine the search. We can also scroll down to the bottom of the page and click here to edit display options. And when the pop-up box appears, you can use the drop-down arrow at the bottom of the page to adjust the number of options that are displayed for each of the selected stocks or indexes. In this case, we're going to select 1. Now, upon conducting the search again, including calls only in this particular instance, you can see that we've jumped down to only 2 potential options. Now, if an investor isn't targeting an individual equity specifically, they could use the set of preset screens all by themselves. This will allow them to choose from 11 different preset screen options, including highly ranked stocks that exist in our VLIS 1700 and VLIS small and mid-cap surveys, as well as call options only, put options only, leaps, which are longer-term options, or any one of our recommended options. Then to the left, the box marked industry allows you to select an industry or any number of industries in which you might like to conduct a search. So for another example, say we remove all of the data from the screener and just select naked call buying from the list of preset screens. We set our display to only show 1 option per underlying stock, and then we click search. Now we can see we've yielded 58 results, including companies like Amazon and Target. And if we had not changed the pre-designated display options, this probably would have shown roughly 200 results associated with our recommended options. We could then go back to the screener and once again looking further towards the bottom of the page, We can come to our 8 rank selectors, which are used in the option ranking system to give you options based on the selected criteria. For call and put buying, as well as covered call writing and married put buying, options are ranked from 1 to 3, with 1 being a buy or a write, 2 being a hold, and 3 being a rank that signals when to close out the position. On the other hand, for naked call and put writes, options are ranked from 5 to 3, with 5 being a write, 4 being a hold, and 3 being a close. You can click multiple boxes in a given row to broaden the number of options that meet your criteria, and clicking boxes in different rows will allow the screener to combine common ranks and technical ranks with highly ranked option trades. Screens can be even further refined using the additional option information segment of the page. Here, the drop-down arrow shows you more than 45 different criteria for your search, including bid-ask spreads, expiration dates, and percentages in or out of the money. These fields are separated into 5 divisions that focus on covered criteria, information about the underlying stock, margin specifics, the option itself, and the investor's risk tolerance. Also, before investors proceed to submit a search, you can edit the metrics that will be displayed in your search ahead of time by clicking Edit Display Options at the bottom of the page, as we saw earlier. So from here, you can add or remove columns by highlighting a number of different criteria and clicking the left or right arrows that separate the boxes titled Available Columns and Displayed Columns. Then, at the bottom of the display options, investors can sort their results in advance of the search, or they can designate the number of options that they want displayed for each individual stock or index. Putting it all together for the screener, subscribers might find it a little tedious to repeatedly open the page, select the ranks and strategies that meet their preferences, and then incorporate additional screener information into the available fields. But if you head back to the top of the page, you'll see that you can take the screens that you've built and been working on and save them for later use. Once a screen is saved, you can retrieve by clicking Choose File, selecting the screen, and then clicking Open. Moving on, we'd also like to highlight that on the left-hand side of the screener page, users can click on the Recommended Options link, and this will provide a list of highly ranked options for the 6 basic option strategies, including call buying, naked call writing, covered call writing, married put buying, and naked put buying and naked put writing. This part of the site is usually beneficial to our newer subscribers, as it can help create a working knowledge of the primary option strategies and offer companies that they may find attractive for option investing. By selecting any of the option strategies from the drop-down menu and clicking search, you'll find our top 200 picks, as I mentioned earlier, for each of these strategies. The program limits the number of options per underlying stock to a maximum of 5 to make sure that there's a diverse assortment of selections in your pool. That said, one of the limitations of the recommended options list, and the reason why we say it can be more useful to newer subscribers, is that it doesn't take into account specific investment considerations. So, for example, a subscriber might want to search for covered call options that are at least 5% out of the money and expire within the next 30 days. But to find options that are suitable for those criteria, you'd have to use the standard screener in order to incorporate those preferences. As always, once a potential option investment has been highlighted, we encourage subscribers to delve a bit deeper and to confirm that the company-specific information presented matches up with their investment thesis and general suitability. And we're going to come back to the screener in just a minute, but for now we're going to take a more in-depth look at the Survey Issues tab. And from here, you can find most of our weekly strategist reports, which are archived for educational use. Oftentimes, these reports highlight a particular investment strategy, and we'll dive a bit deeper into its application. They can also help you, the user, understand what tools the Value Line Option Survey offers, such as the screener, how they're used, and how they can be employed to harness a given strategy. Similarly, a lot of other educational offerings are present under the 4th tab on the Options page, and that's the Resources tab. The Resources tab takes you to a number of links, most of which have been long-standing features of the product. The educational how-to guidelines at the top of the list, as you'll see in a moment, is probably your most useful source of information on how to use the option survey and the various option strategies. So the Resources tab has this 50-some-odd page guide, as well as a glossary for reference if you're having trouble determining what certain values mean or what acronyms in your results might stand for. It also offers a guide titled How to Invest in Options. And this guide consists of a number of examples and visuals that can help you better recognize opportunistic investments. Further down the page, you can also see options by stock ticker, which gives you the full option chain of any stock or closed-end fund that you enter. We also have the expanded screener, which we discussed before, and some downloadable Excel software. So it's really our aim for these tools to help you increase your portfolio's return, when markets are relatively calm, and minimize volatility in times of market uncertainty. And so to round it all out, we're going to bring you back to the screener page and put the product into action a bit to show you just how useful it can be, and for some of our newer users or potential users, help you decipher what you're looking at when you've retrieved some of your results. Now, typically, we find that a lot of our subscribers gravitate toward writing covered calls. For those of you that are new to options, the covered call strategy is implemented by purchasing and maintaining holdings in a particular equity and then writing call options on the same security. The strategy allows the investor to boost the yield on their overall portfolio during times when upside potential might be limited, or even when they just have a basket of stocks that they're trying to hold and want to maintain, but still want to use their position to generate some immediate income. In the screen that we're setting up for you right now, we're going to be looking for rank 1 covered call rights that are based on stocks that have a common rank of 1 or 2. And under additional information, we're specifying that we're looking for a delta with a minimum of 20 and a maximum of 55. This is going to help assure that no options are too far out of the money or too deep in the money. We're also adding a specification for options that provide protection of at least 2%, and we're only including companies that offer a dividend yield of 2% or higher, just to minimize the overall number of results that we generate. Now we say this because, as we'll show you right now, every additional metric that's added to your screens can have a fairly strong impact on your results. So if we go ahead and we remove the dividend preference, and then we run the search, you're going to see that we've yielded 58. Oh no, I'm sorry, the page is still loading here. You're going to see that we've yielded 388 options. All right, so then if we head back to the screener page and we reinstitute that dividend yield of 2%, of a 2% minimum, and we run our search again, you can see that the number of results has dropped significantly down to 94. Now, we can continue to play around with these numbers and really nail down the type of investment strategy we're looking for. For instance, maybe you want to go back and look for stocks that offer an even higher yield, and we'll do that right now. We'll head back. Let's say we want to do a minimum of 3.5%, and then run the screener again. And now we've dropped down from upwards of 90 results down to roughly 30 results. And say we want to make sure that no options expire too soon into the future. Let's head back to the screener and even institute a minimum expiration date of, say, 6 months out into the future, which would be about May 1st of 2021. You'd simply add in the date, click search, and we've cut out a few more results from the number of options that are listed. So as you can see, the screener can be highly sensitive to the inputs that are given, but it's also highly customizable, so you can search broadly or get very granular to find options that suit very specific strategies. But now that we have our condensed list here, which are all options that are covered call options that have deltas between 20 and 55. All of them offer 2% protection, a minimum of a 3.5% dividend yield, and they all expire no earlier than May 1st of 2021. We'll choose one random option from the list. In this case, let's say PNC Financial Services. And what you're going to do is head down there, click the box, and move back to the top of the page and click View Profile. You can also select a multitude of options simultaneously, and they would all appear on this page. Now, upon bringing this up, this box, as you've seen earlier in this presentation, it'll give you a series of different data pertaining to the individual option. And again, because it's a covered call option, it appears in orange. So we have PNC Financial Services, and the call here expires on May 21st of 2021, and it has a strike price of $130. The stock is currently trading at approximately $128.43, and the per annum yield on this particular option is 20.51%, assuming another covered call is written right around the time the first call is scheduled to expire. And for those of you that are our more seasoned investors, this is also called rolling the call. Importantly, we want to mention, not every screen is going to generate results. It is possible that you can get too specific in your screening criteria, and you can inadvertently eliminate all possibilities. The screener might also yield 0 results when screening for a particular option strategy or a specific company if the stock just doesn't have any attractive options that match up with a particular strategy at a given point in time, as you can see here. In this instance, you can check back at a later date or widen your search criteria, and that might help you retrieve some results that are at least close to the criteria you're looking for. We like to think this variability is actually one of the primary benefits of the screener process, because it helps to fully cater to pretty much any individual's investment preferences. And that's also one of the reasons why we have our daily posts, to highlight how the screener and how the weekly option strategist can be utilized to cater to you and your preferences. We hope that you've enjoyed this. It concludes our instructional portion of the webinar, but for anyone that would like, we can email you our preset screening data and display criteria for the covered call screen that we've highlighted today. This will let you load them into the screener anytime you want, and you can generate results based on the most up-to-date option pricing information. We also offer preset screen files for all the primary option strategies, and if you want, you can start off with these base screens and then make adjustments just like we did today to help tailor your examples down to your own preferences. Now at this time, I'm going to turn the call over to one of our other senior analysts and representatives on the options team, and that's my associate Brian Fong, who's going to be able to answer some of your questions that you've posed throughout this presentation. But again, we hope you've enjoyed this introduction to the Value Line Option Survey, and if we're unable to get to any of your questions, we welcome them at vloptions@valueline.com, and we'll do our best to get back to you in a timely manner. Brian?
Thanks, Rob. Good afternoon. Again, this is Brian Fong, the Senior Equity Research Analyst at Value Line, also a member of the options team. Thank you for joining us today. I'm going to try to answer a few questions that we received during today's call, as well as some that were sent by participants prior to the event. Jason asks, what is the best option to buy? That's a great question. As we mentioned, our screener can highlight the best options for any of the available options strategies, but one of the primary benefits of options is that there's really no one-size-fits-all solution. Our product, in particular the option screener, will afford you the ability to tailor your option selections to match up with your particular investment portfolio, risk tolerances, and overall suitability. As an example, the best options for someone with a basket of blue chip stocks and they want to increase the portfolio yield could be covered calls on some of those stocks. Alternatively, someone that is bullish on a company or industry and wants to utilize leverage to take advantage of that perspective may want to screen for undervalued naked calls. And finally, an investor concerned about an upcoming earnings release and how that might impact the stock's price may want to purchase some put options to hedge their position on the underlying stock. Thomas wrote, where can I learn more about option investing? I'm glad you asked. We have our How to Invest Using Option guide that Rob touched on earlier. This can be located from the main Value Line page. It's under Investor Education. I believe Jeff's getting there now. May take a minute or two to load. But it's under the Tools and Guides section, and you scroll down to the bottom of the page to find the How to Invest Using Options guide. This 57-page educational guide is available to all investors and is provided free of charge to our potential subscribers. We also offer numerous education and how-to guides under our Resources tab. Moving along, Richard wrote, how can I replicate the results in the weekly option rank performance? This is a question that we get from time to time. As mentioned, we view the options or view options as a whole as a tool to add to your existing investment practices rather than a simple tradable portfolio. When you consider that one single stock like Microsoft has more than 1,500 options on it at various strike prices and expiration dates, it's easy to see that the option market has substantial depth and volume to it. This is also evident when you consider that our program processes all pricing data on the entire option universe. In the past week, it was more than 730,000. It would not be practical to purchase a basket of options in an attempt to index the entire market. The transaction cost to implement such a strategy would be simply too great. That said, the weekly option rank performance is the best way that we can highlight the strength of our timeliness ranking system, along with our option screener, and how those tools can help you to reach your investment goals. Moving on, Stephen asks, what tools are available to find put option sale candidates? We touched on this briefly earlier, but we offer our recommended options, which highlight the top 200 put options available based on current pricing data. This is also available for all primary option strategies, not just puts. Secondly, our option screener allows you to start with a basic put option screening criteria and then filter those results with roughly 45 different data points. Next, we have how can an investor use volatility to get the best prices and premiums for selling puts? Volatility is baked into our option screener and the valuation model through the use of our adjusted volatility forecast. This is a key factor in determining whether a premium is undervalued or overvalued. Typically, investors will want to look for purchasing options that are deemed undervalued and write those that are considered overvalued. Moving on, Kai asks, I tried the wheel strategy with put options, looking for options that are offered weekly and have relatively high premium, but do not run into earnings. Is this possible? Yes, it's absolutely possible. The option screener will find undervalued options. You just simply enter in a maximum expiration date 1 week out and put in a minimum value for the premium. You will need to manually confirm that you're not writing an option during an earnings release period. That is one item that we don't screen. We can't really bake in the earnings release into the screener. Moving on, Raymond asks, I plan to use covered calls to supplement income if a trade goes bad, i.e. the underlying stock significantly decreases in price and I'd like to get out of the stock, or if it significantly increases in price and I want to keep the stock, what's the best exit strategy and what does that look like? If the trade goes bad and the underlying stock decreases significantly, you would simply sell the underlying stock with your broker like normal. And then depending on how long the call option has until expiration, you can decide whether or not you want to simply let it expire, or if you do not believe the stock, and if you don't believe the stock price is going to recover, or you could have your broker close out the call position. As far as having the stock price increase significantly and you want to keep it, you could write calls that are further out of the money and above the current trading price. The premium will not be as large, but this will also minimize the likelihood that the stock will be called away. The duration or timed expiration will be another variable in this equation. Depending on your outlook on the individual company and the level of volatility that the equity trades with, you can write shorter calls or longer ones. The longer ones can be as long as 2 years out. We'll have a larger premium to compensate for the time value of the option, but we'll also carry greater risk that the stock price will move above the strike price and thus be called away. Believe that's all the questions that we have so far. We hope you guys have enjoyed this introduction to the Value Line Options Strategist and are encouraged to sign up for the trial membership for either the options product or the Value Line Investment Survey. This webinar will be available about 48 hours on our YouTube channel. And if you have any other specific questions, please send them to vloptions@valueline.com. I'll be happy to get to them in a timely fashion. Thank you and have a great day.